Sponsored by Mackroyce, Corbitt, and Computer Printing, etc. Computer Printing, etc. Offering quality printing at an affordable price.
We've got some wonderful presenters here tonight from some lending sources that I'm sure between the ones that are here will be able to answer any questions that you have. And again, I want to welcome you all here, and you know, I don't want to take up too much of your time, but if you have any questions about what we do and how we can help, feel free to ask. I've got cards here, and definitely visit our website, MixsonBusinessCenter.com, and we also have a Facebook page, Mixson Business Center. So check it out, like us. You know, I'm sure all the Facebook users know how the likes work. So that'd be great if you could do that. But you know, with that being said, I'm going to go ahead and turn it over to Mackroyce, and again, just want to welcome you all.
All right, thanks, Devon. How's everybody doing tonight? Good. All right. Well, as Devon mentioned, we're here to basically learn. This whole event, this whole thing was put together by Mike Smith, the Chamber of Commerce. Several other organizations have been participating in this to make this possible for you. This is pretty much a year-long project. We're doing once a month, the last Thursday of the month. And we bring in people who are proficient in different areas to educate you on different things to help you grow your business, as well as start your business. This one is actually going to be on finance options. Whether you're looking for a loan, possibly even a grant, or something like that from the SBA or a local bank, then definitely we'll have some information for you, and we have some educated people who are going to basically inform you on that, from banks as well as organizations and schools in this area. Once again, my name is Mackroyce Corbitt. I'm the owner of a small company here called Computer Printing, etc. And this whole program is called the Economic Summit on Jobs. I see we have some new faces. And to let y'all know one thing, we actually have the main summit. This is done once a year, the main summit. And it will be held on the 19th. So if y'all want to participate in this or get involved with the Economic Summit on Jobs, our main one is coming up. I'm going to pass this around. But without further ado, I'm going to ask Mr. Steve Turkoski of the Chamber of Commerce also to come up. And he's going to tell you a little bit about the Chamber and introduce some of our wonderful speakers who we have here today.
Okay, thank you.
Thank you, Steve.
And I'm going to start out by passing out a couple of things, and I'm glad that Roy said what he did, because he mentioned grants in there. And yeah, but I want to do them in an order, for to tell you the truth. So if you would, just kind of take one and pass around. And what I want to bring your attention to is that first line right there. Is there are grants available, but you're not going to get them from the Small Business Administration. There are no grants for small business development. Now, why did these people get on TV and say there's grants available? That idiot with all those question marks on his suit? He can say that because there are some grants out there, but they go to nonprofit organizations and they go to the Small Business Development Center. They're funded through that. So he's not really lying when he says there's grants available, but it's not money you can get. So it doesn't apply to you. Now, there's foundations out there that you may be able to find some grant money from. And you know, please do try that. But don't get involved with one of these organizations that wants $2,500 and they'll say, we'll guarantee we'll get you a grant within so many days or so many years or whatever, because that is a scam. We had a gentleman come in, he was just about in tears at the Chamber of Commerce, and his wife had spent $2,500 to go to a 2-day seminar at one of the conference centers around here. And he wanted to know, was it legitimate, and you know, look at the literature. The literature, part of the literature he brought in, which was in 2 binders, was stuff I wrote. And so what these people do is they download stuff that's free to you out there. It's in the public domain. There's a catalog of federal domestic assistance, which has all the federal grant monies in it. People are selling that stuff, and they downloaded all my stuff from the Chamber of Commerce website and was selling that to other people. So don't get caught up in that. The next thing I wanted to pass out is a sheet that basically reiterates what the first sheet said there at the top. It says there's no grant money, but it does give you, this is a website from the Small Business Administration, and it will give you a tutorial, sort of, or walk you through a process where it asks you questions about what are your needs and your intentions and it will direct you towards certain things. And so that's good. Now this next paper is the 12 best sources of business financing. This is something from Forbes I downloaded today. And some of the sources on there you're going to see are your traditional bank loans, small business administration backed loans, the 7A loans. I don't think it talks about the 504 loan in here. And it also talks about, or it talks to, somewhere on here, one of the numbers are organizations like the Regional Planning and Development Commission. The Regional Planning and Development Commission, which we have two representatives here today, Ms. Emily Waters and Rachel Armstrong, they have some loan programs. And right here, the lady in the back is Sandra Lucas. She's with the Small Business Development Center. They do not loan money, but they provide ongoing, on-demand, and scheduled counseling for anybody who wants to get into business, no matter what the topic is that you're involved with. Whatever it is, she can help you out. And if she can't answer your questions, she can send you to the people that can. Then we also have two banks represented here, Regions and BB&T, and we'll introduce them here in a minute. They brought, there is some handouts here that the various entities have brought, so you can pick those up at your leisure. The last thing I wanted to hand out was this. This document is something I printed out today, and this is from, it says Small Business Lending of Large Lending Institutions based on the call report, June 2011. There is an office of the Small Business Administration called the Small Business Office of Advocacy. And what they do is put together reports and studies that basically provide you details on who's doing what, where, in which state, how much money is available, where is it being utilized. And what I want to point out to you is the reason I invited these two financial institutions here is because you'll see this ranking here, and these two institutions are listed at the top part of the page. You know, so they have a high ranking there. We have, and that may not be every single year, but in this particular document, they're up there. And so, anyway, that's why I invited them. I can't invite every bank in town, but I figured, well, I got to have a system. If I'm only going to invite a couple, what's the system I'm going to use? And that's my system. So that's something else. Now, everything that I've just passed out to you is available on the website that some of you are familiar with. That I've mentioned it before. It's the WPRI.info. That's a website that I created, I maintain, and I post stuff on there. And if you go to the WPRI.info and go to the right-hand column, you'll see a list of pages, and one of them is small business and entrepreneurship. These documents I passed out to you are on there, and many other documents are on there. And I would say to you that when you leave here, your education doesn't stop, your data collection doesn't stop. Just keep on working on it, and you know you can find what you need in there. The Chamber of Commerce, you know, just by the name, you know what we're all about: commerce, trying to build business. So when you do get established in your business, please think about joining the Chamber of Commerce. We are an agency that promotes small business, and we do that through networking. We do that through sponsorship of programs. We coordinate various events. We're involved with this, and we also are a lobbying arm. Well, not necessarily lobbying, but we definitely have an agenda that we try to promote through the state and through the federal government. I didn't bring any cards with me today. I apologize for that, but I've met many of you before, and if you need to get a hold of me, Devon there knows exactly where I live and where I work, so he can get you. So with that, Sandra, if you don't mind, would you start out and just basically tell what Small Business Development Center does, and then we can get into the specifics of the programs that are available.
What I have tonight, I don't get a copy. Now, as Steve said, I'm Sandra Lucas. I'm with the Small Business Development Center at Troy University. Our office is located in Troy. Now, I'm here tonight because Brent McMahon, if you'll notice, under SBA on the cover sheet here, asked me to come and represent him and explain SBA's loan programs to you this evening. Now, my contact information is right below Brent's. So what is a small business development center? We are funded in part by the U.S. Small Business Administration. We are funded from the Defense Logistic Agency, DOD. We are funded in part by the state of Alabama. There's a small business development center located at each of the 4-year higher education units that are publicly funded in the state of Alabama. And if you'll think about where they're located, you can see that each one covering a small geographical area, you would have the entire state covered. Now, our mission is, it's a big old long thing, but basically is to improve the employment rate, to improve the success rate of small businesses, and to improve the small business community with regard to the economy. Now, from Troy, we cover the 10 most southeastern counties, geographically looking, say, from Montgomery all the way down to the Florida line, and then coming over to Georgia, those 10 counties, with our funding from the U.S. Small Business Administration. With our DLA, our Department of Defense funding, we pick up 3 more counties. That would be Macon, Russell, and Lee. With that monies, that funding, we work with our small businesses that have the capabilities of doing government contract work. Now, that's not to say that every small business is qualified to do government contract work. It's not for everybody. What we do is to try to get you to the point that you would be better equipped to market yourself. The different steps that one would have to go through to even attempt to get that first contract with the U.S. government or with the state of Alabama military. Now, do you want me to go ahead with SBA now, or you want me to wait?
Yeah, just hit some highlights basically, and then we can, so they know basically what it is you do, what the SBA does, and then they can ask whatever questions. Of course, there's tremendous amount of information on the website. And if you don't mind too, when you touch on the 504, we want to pass out Jennifer's information.
Okay. All right. As I said, I am here for Brent McNamara. Brent is with the U.S. Small Business Administration. He covers the southern part of Alabama. Now, there's a difference between an SBDC and SBA. My job with the SBDC is to guide, to inform. Brent's and SBA's, they do have a component in with SBA with regard to government contracting as well. They have loan programs. They work in with government procurement, and a real big push for small businesses. Now, it depends on who is in control, and when I say in control, that means of the house and who sits in the big seat, as to how much assistance is provided and how much of this, okay? So, SBA is responsible for the overall big picture. They are responsible for the lending part, which I'll explain what that means. SBDC, we guide, we assist, we sort of help you take those steps so that you want to go see the bankers, that you are ready to see the Regional Planning Commission. That is what we do. Now, that means that we spend a great deal of time talking and a great deal of time of providing you with different pieces of information so that you're better equipped, so that you know why you are applying for a loan, so that you know why the bank might turn you down. You know this before you go, so that you know whether or not you need to put this on the back burner until you make a correction, or if you need to proceed with it. Now, you can't imagine how many questions and how many times the phone rings when people have seen Steve's commercial that he told you about on TV. It's misinformation. Man did a bang-up job of gathering all kinds of information out there, and he put it together in a nice book that he wants to sell you for $50. Now, as long as you don't send the book back demanding your money back, there's no problem. But if he refuses to send you your money back, then hopefully that would be a chance to get it. But anyway, that's all beside the point. Yeah, there's monies, there are grants out there to do a lot of different things. There are grants to use to go to school. Everybody knows that. There are not grants to put you in business. And the first sheet that I put together for you, you see my red X? SBA does not have a grant to put you in business. Now, SBA does have a grant, and it's called the SBIR, that's Small Business Innovative Research. This is research that's very technical. It's research that most folks in this room, with the exception of maybe one, wouldn't even attempt to read. So it's very in-depth, it's very technical. Things like, I use as an example, the runway product, the TAR. Perhaps maybe you come up with a product or a process that would reduce using the rubber on the tires of military airplanes. Small Business Innovative Research Group. To go out and improve somebody's electrical wiring in their building? No. Most likely won't happen. Now, as you thumb through, what I tried to do was go on SBA's website and try to hit the high points that you might want to look at with regard to the different loans SBA has. Now, please understand that SBA operates under the Equal Opportunity logo. Now, that means in that I am female and you are male, my chances are not enhanced, nor are yours. I am white, you are black, you're male, I'm female. It doesn't matter. Your chances are not any better than mine. Equal opportunity. What makes a difference is what you have in your business plan. Now, it's when you go into business, you need to think rationally. So, when you put together your business plan that is going to be your tool to get your financing in order, it needs to be rational as well. So, doesn't matter. Black, white, green, yellow, doesn't matter. Male, female, doesn't matter. Just what you got as far as your content of your business plan. Now, some folks won't mention to you that you need one. I'm going to tell you, you do need one. Even businessmen and women, business people that are in business that maybe started their business 30, 40 years ago, they might not have a formal document as a business plan. But I guarantee you, they got one up here. I can't imagine anyone being in business that long and not know it. And that's what a business plan does. It makes you the expert. Better you than somebody else. We help the Small Business Development Center. We help with regard to helping you put your business plan together. We guide you through the process. We even will proof your business plan for you. We do not write them. There's a certain amount of liability that would go along with that. I can assure you the number of people in here tonight, there would be just that many different ideas on how to operate a business. So no, we won't write it for you, but we'll guide you through it. After all, you are the person that will be responsible. Steve gave you a good resource if you are interested in grants. It's the catalog of federal domestic assistance, so it's www.cdfa.gov. Now, the federal government and Congress, they will vote on whether or not to put monies aside for a grant. And I'm sorry about my voice. When the barometric pressure starts bouncing around, so does my voice. So, anyway, when Congress says, okay, we're going to, I've got one, thank you. When Congress says, okay, we're going to put this into a grant, it will be assigned a number. So on this website, you can look by number or you can look by agency. If you're looking for a grant, you got an idea of the business that you want, then, you know, that's the federal agency you need to inquire if there might be a grant for you, okay? The next page, SBA is expressing pilot programs. SBA, on a national level, they spend a great deal of time on trying to come up with loan programs that would be helpful to the economy, to the small business person that has an idea of that, or that small business owner. Several years ago, when I first started working with the SBDC, had a wonderful program. It was for veterans. It was a direct loan program, meaning that you worked directly with SBA. You did not go through any other entity. It was for veterans, and you could apply if you also lived in what was referred to then as a labor surplus county, meaning that the unemployment rate was really, really high. Okay, good program. Okay, Congress did away with it. Okay. Then they had a program that was called LODOC, standing for low documentation. You didn't have to present a great deal of documentation in order to get past that first initial step. Now, it left a lot of the responsibility for banks to make that lending decision. Oh my goodness gracious, low documentation. Whoops. Good idea, forget it. We don't have that program anymore. Currently, even past that, there was a loan program, a pilot program. It was like 50% had to be put in by SBA, 50% by the state, 50% with the state and another entity. And the loans would be made to those persons who the lending decision was based solely on credit. Collateral did not come into play. Okay, right on for about 2 years. A good loan program, especially after you get into business, if you've got your monies tied up in your fixed assets, your high-ticket items, then you might not be able to add on to that working capital that you so desperately need. Well, go into an area or to an entity that is, the loan is based on your credit score, not collateral, would be a good opportunity, you know, for a small business person. Now granted, the interest rate was higher, but you're not having to put up collateral to secure the debt. So it made sense. Okay. Now we don't have that one anymore. So what we've got here, an express loan, and as they say, pilot. The only other pilot program that I am aware of with SBA is one that's called the Patriot Loan. If you are a veteran or the spouse of a veteran, you can apply. Now, when the requirements are very much the same as SBA 7A. They will work very closely with the bank. The interest rate will be set by the bank as it is in just a regular SBA guaranteed loan. Then I have included SBA's documentation with regard to how to prepare your loan application. The credit factors, that's real important. It is a limiting factor in most loans. They have a section on determining your financing needs. And I'm not going to go on into the rest of it, but it's something that just start taking a look at and reading some of the information. SBA, the granddaddy of all those loans, is called 7A, numerical 7, alpha A. Now, under 7A, there are lots of little programs like the Express and the Patriot. Now, also we have, SBA has a program called the 504. Asked me to meet you. And I'm also good to see you.
Let's see if we got some more information. Checking out some of the jobs.
Community Development Corporation.
Pass out.
And they provide 504 loan assistance, but she couldn't be here, so her card's attached there, and you've got some letters for that.
If you look in SBA's guide, they really did a good job putting this particular booklet together. But beginning on page 29, you will see the loan programs that SBA administers. You can also take a look at the use of the proceeds, who qualifies, other pieces of good information. And on page 30, at the bottom, you'll see the 504. Now the 504 is a hybrid. It is altogether different than any of SBA's other programs. A 504, you have to work through or with a certified development company. Acronym CDC. And this time we're not talking about control, disease control, okay? A CDC is a certified development company. What they do is they actually sit down and package your loan for you. They'll take a look at your business plan, and they will tell you if you have met the criteria with regard to what has to be in the business plan itself. If you need help, then they will help you with that. But their expertise is they are financial packagers. Now, a financial packager will take a look at your needs and then look outside to find a program that would fulfill your needs. Now, particular training for this particular program, 504, the numeric numbers 504, 50% of the loan that you need will come from the bank as a SBA guaranteed loan. 0 stands for 10. You, as the client or the customer, would have to come up with a 10%, typical cash money. And then the 4 stands for 40% of the total loan would come from the sale of debentures. Now, if you don't know what a debenture is, you probably don't need to be involved in a 504. That's probably one of the hardest things that I ever tried to make my mind wrap around. It doesn't make sense, okay? It's not rational, but nevertheless, what you do is you would be get in touch with the Southern Development Council, Jennifer Sandley, set up an appointment, go in and talk with them. Now, I said you had to work with us through the CDC. There are a couple of others out there. Southern Development Company recently won an award for the state of Alabama and having the most 504 programs with SBA for the entire state. So that speaks very well of the Southern Development Company, and certainly Jennifer was responsible for many of those loans. There is another one, Alcon out of Birmingham. There is, went right out of my head, but you'll find a list of them here in your SBA guide. Now, with SBA lending, it is a guaranteed loan, okay? SBA is not going to sit down and write you out a check. SBDC is not going to sit down and write you out a check. I wish we could, but we can't. Your monies is going to have to come to you from the bank. Now, the guarantee is being made to the bank, not to you, but to the bank. That should you default, there will be a percentage there that SBA is going to have to take care of. Now, that's the reason it's sort of tough to get one. That is, you're not going to find any entity out there that's going to take 100% of your risk. Okay? It's your idea. You have the responsibility of going through and making sure, doing your research and putting all your information into form. You're going to do this and you're going to know that your business is going to succeed before you ever go in to any lending entity. Now, first thing to do is to go to the bank, and I'm going to take up for them. They have policies and procedures that they have to follow. If they don't, they have auditors that come in, and they'll jerk their license, their charter, in a heartbeat if they are not following their policies and procedures book. Okay. So if something's not right in your business plan,
It's
that's going
online.
to turn you
I can
down.
get you the website.
Policies and procedures says they got to. It's not because they don't like you, okay? They can't afford to. All right, so what's your options then? Are you a dead duck in the water? No, there are other options out there, and this is the reason for this particular program that Devon and Steve and Mackroyce have come up with. What options do you have?
How many of you here are either engaged in a nonprofit or want to start a nonprofit? Does that include anybody here? You're all going to start a, okay, if you're a nonprofit, okay, you can't get a guaranteed loan from the SBA. Okay, but you can get a grant. Grants, but not to start a business, but to do other things. Like, for example, if you want to start a daycare center, you're going to provide, under Title 26 of the U.S. Code, the purpose of a 501c 1 through 27 is to relieve the burdens on government. So if you're going to do something that's going to be a pseudo-governmental function that's going to relieve the burdens on government, there may be grant money out there. This social service agency right here, the Alpha Family Service Center, it survives on grants. Many organizations, we have over 300 nonprofits. So if you're a nonprofit, forget about getting an SBA-backed loan. As she said, the SBA doesn't give you the money, but the bank can make a loan, and it can be backed by the SBA. So if you're going into business, you're going to need some capital. Where are you going to get that? Some people start their business on a credit card. They take their savings out. They get a second mortgage on their house. There's a lot of ways you can get some money. In order for you to move into a business, you might want to just consider going to the bank, seeing how your credit is, and getting established a credit line there, or borrow the money specifically for that. If you don't qualify, then they have the option of going the SBA-backed route. But if you can't get that, then there's other options. And we have the Regional Planning Commission here that has a pool of money that was put in by area banks that is managed here locally. So let's just kind of go chronologically or in sequence here and go to the banks next. And Mr. Paul Stanley's here from BB&T, and if Paul, if you don't mind talking about the process and what your products are that might affect them, I appreciate it.
Just in case you need the spelling.
I'm a BB&T, that stands for Branch Banking and Trust Company. I like to tell everybody that because that's our family name. Originated in 1872, so we're 140 years old. And one of the things that I also like to make people aware of, we haven't lost money any quarter since we originated, not through the Great Depression and not under this current downturn. So we are strong. We are a certified lender with the SBA, which means that if you come to us and talk to us about a 7A program and we approve it, we do not have to ask the SBA for approval. They automatically take the guarantee position. So that makes a little bit more streamlined working with a bank that is a certified lender. One of the reasons why we're one of the highest ranking lenders in the United States when it comes to giving out SBA money. As far as the procedure, you've already heard a couple good speakers talk about what you can and can't do. Let me back up and tell you the most important thing you can bring to us is two things. That is your good credit rating and your business plan. Because if you come to us without a good credit rating and your business plan is fabulous, you're still probably not going to have much of a chance. So if you have had blemishes, do what you can to clean it up. There are agencies out there online that you can go on and have your credit checked. I would suggest you do that. If you come to a bank and ask a bank to pull your credit and you do not have a valid reason for them to pull a credit, they're not going to pull it just so you can see what your credit rating is. You need to go and get that elsewhere. As far as the down payment, they were talking 10% with the 504 program. It's not necessarily always 10%. It could be 15%, depending upon the type of property and also cash flow, et cetera. You know, there are certain ways to protect that. With a bank, when you come in and you're looking at collateralization, do we make unsecured loans? Yes, we do. Do we make unsecured loans for startups? Rarely, but we can. It depends on your credit worthiness and also what kind of outside cash flow and assets you might have. I'll give you an example. You're a husband and wife team, and you're one of the two spouses work outside the home and have generated an income, continues to generate an income, and that supports your personal obligations, then that makes it easier for you to start a business because it's not totally supportive of all your debt service. What you find, very few businesses start up and are in the black immediately, and if they are in the black immediately, they rarely make you enough money to truly support a lifestyle until you have a chance to mature that business at least somewhat. So it's good to have another source of revenue as part of that. The business plan, without a doubt, when she was talking about they don't write it, well, it's a good thing they don't, because if you come to a bank and you try to present a business plan that is inadequate, is not well thought out, that does not have projections and performance of how much income and revenue, how you're going to get there, what your expenses are going to be, if you haven't gone through the effort to put that together, then how do we know you're going to do the effort to run a business properly? So it's the way you're going to impress your banker up and beyond the credit rating, which is extremely important. That will go a long way. If you've got a 700 plus beacon and you come and talk to us, we're really going to talk to you. You got below a 600 beacon, you might as well probably not even come in, okay? Because that's just not going to get it. And anything below 650, above 650, yeah, but if you got above 700 and you protected your credit, we know you care. And then that's important to you. That means that you're going to make every effort to pay us back. And grant you, I love helping my community, but I don't do it at a loss. So I do plan on making money on it as well, and that's the way I get paid back. Let's also talk about when you do, I mentioned projections. You've got to give that a lot of thought. What's your ramp up period? How many times people bring a business plan in and they'll do a 24-month projection, but from the very start to the first 12 months, they're going to make whatever, $10,000 a month of revenue, and it's consistent across the board. Is that reality? Absolutely not. You start up, what are you going to make? Maybe make 1,000, okay? Maybe 0 the first month. You got to market yourself. So in any event, you got to give a lot of thought to how that revenue is going to be generated, what you're going to do to improve it, and then what your expenses are, come out to your bottom line, and then you figure, then we'll plug in debt service as a part of it. Don't ever hesitate to think about bringing in an investor. If you truly have a business plan that has an opportunity to have a strong return, then there are people out there that are well-heeled that are willing to get involved. If they believe in your business plan, they believe in your character and your integrity, and they believe that you're somebody that they can invest in. Banks are not investors. We're lenders. So when you talk about that startup capital, that if you do not have a home equity in your home, or you don't have other sources of Cement credit card, that would be one of my last sources of trying to do startup money if I was someone, because that's just adding essentially high interest debt and potentially short-term debt. So in any event, investors are another source. Banks try to make it easy for you, we really do. We really try to help the economy grow, and we try to help you as far as getting on that track. But we are limited, and those limitations have become even greater since 2007, 2008, when we had such a downturn in the banking industry, predominantly because of real estate. But in any event, because of all the regulatory interpretation that has occurred since that period of time, it makes it hard on us to try to loan money as easily as what we might once done. Documentation levels are much greater. What we have to do to certify that your ability to borrow so that we can qualify that loan to regulators is a lot higher than what it ever has been before. So understand the process is longer because of that, and also because banks have it, because of the downturn and margins were pinched, we try to do more with less. So there are less people in every bank trying to do the same efforts that we, before 08 and 07 and even before that, we had more people on the ground in every location. So your lenders and your tellers and everybody are doing more with less people. So again, I'm easy to reach. I'm on West Main Street. You have a stack of my cards back that Devon took. He got someplace. I highly recommend you come in and talk. You will not probably talk to me on a startup. I have small business lenders. My position is I'm area executive over this on all Wiregrass, all Southeast Alabama. But I certainly support what the Chamber, the Small Business Development are trying to do in this community. And I really appreciate you all for coming. I also want to tell you that work with Emily for our first real effort on a deal right now. We're tying not only Emily in to help bring some equity funding up front, but we're doing a 504 program working with Jennifer Seymour on that on the other side. And you can't find two higher class professionals than what I've already determined these two ladies to be. And I've worked with Jennifer before, but the first time I've had a chance to really work with Emily. And the thing of it is, this business has a great business already. It's already going on, has a strong history, but they're looking to expand, and the monies aren't there to make that expansion as easy as what we all wished it could be for them. So we paired up between Emily and Jennifer and myself, and hopefully be able to put that deal together. And it's not a done deal yet. We're at the beginning stages of it, but it's exciting, and it's exciting to see that business grow and prosper and be a part of their team in making that happen. One thing that they're talking about the small business development at SBDC is being consultants. Banks also want to be part of your first call consultant. We want you, when you're having a brainchild, as you've got a business already going, and you're thinking, well, I want to make this next curve or make this next expansion, get your banker involved early on. Your accountants can tell you about how to save taxes. Your legal counsel can tell you about how to draw the contracts up right. But if you want strategy and you want experience, get with a strong banker and let them help you walk through the ins and outs. Our job, in some respects, are to blow holes in everything you bring us. Because if you can get it past us, and us blowing holes in it, and us finding ways to say no, then it's probably got a lot better chance of working. And I tell my clients and prospects that come to me, tell them, first of all, you got to do your job and put it together right. And then you got to come to me and be able to answer to me, because I'm going to make you think that I just don't want to do your deal. But it's not that I don't want to. I'm going to be supportive on one side, pat you on the back, but I'm going to say, did you think about this? This won't work. you know, I try to bring some real life experience because I hate to tell my age, but I've been doing this since 1978. So I've been, for about 34 years, I've been a banker, and almost all of it on the commercial side of the bank. So I've seen a lot, and that's worked. I've seen a lot that didn't, and I would love to have the opportunity to put my experience to help you guys. And never hesitate to call me. We'll talk about it. And use your teams back here. They're all good. Thank you.
And he brought up a point there that we talked about, and many of you have been to these sessions before, but that was when you're thinking about getting into business, as soon as you get your business plan, to establish a relationship with those professional organizations, a bank, an accountant, and an attorney, because you're going to need professional help. And right now we have Mr. Mark O'Mary. And
one point though, Steve, banks don't charge by the hour. The accountants and attorneys do.
Yeah, but you still need all three. Chip, come on up. They're from Regions Bank and other strong banking entities. Yes, sir.
Paul really went over a lot of the things that we were going to talk about and did a very good job of it, did a better job than we would probably do. And I'm Mark O'Mary with Regions, and I've been doing this not since '78, but since '84. So I've been working with businesses for a long time. I grew up in Dothan, been back in Dothan for 19 years now. And let me tell you, I admire what y'all do. It is tough to start a business. It's tough to run a business. Working late at night, working weekends and such. I mean, I admire what y'all do, and it is hard. Paul touched on, you know, we're in business to lend money. I mean, we want to. We get paid for lending money. That's the way the bank, primarily our bank, makes money. And we are making loans. Believe me, we're doing it. We're doing it all day, every day. A little bit more difficult than it was back in the go-go days a few years ago. But we're kind of paying for that now. But we still are making loans. And just going to kind of touch on 2 or 3 types of loans. You know, we've talked about some of the SBA programs. Those are great. 504 is a fantastic program. 7A is a good program too. We've worked with those. We're a certified lender also. But primarily, you're going to look at a line of credit. Line of credit should support working capital needs for your business. Accounts receivable, buying inventory, paying vendors, and things like that. And just, first of all, too, nothing is in stone. Nothing's in concrete. There's some little bit of leeway with every deal. But generally speaking, we may lend 80% of your receivables and 50% of your inventory. Working capital loans. Then we've got term loans. You know, term loans to buy real estate, to buy equipment. Generally speaking, real estate, we want you to put some money into it. Typically, it's 20% down. One beauty, nice thing on the 504 project is you only have to do 10% down, possibly, maybe more. That's a good thing on the 504. We can't go quite as long on the bank side as you can on the 504 side, the debenture side. You can go up to 20 years on that with a fixed rate. That's a great option. The bank part of that may be a little bit less. We typically, on real estate loans, may amortize your loan for 15 years, but then have a balloon feature or a maturity to review it again after a 5-year period. And sometimes that's 7, sometimes it's 10. That can vary. But typically, it's 5 years. But equipment term loans, we try to match the amortization of the loan, the payment schedule of the loan, with the life of the equipment. We don't want you to buy a piece of equipment that's going to break down in 4 years, yet you got a 10-year loan on it. At the end of the 4-year period, you're still going to owe more than what it's worth. You got to buy a new piece of equipment, like a car. You know, you don't want a 10-year loan on a car. So that's just kind of some general guidelines on the types of loans and the way we look at some things. And I'm going to let Chip talk just a little bit about some old-fashioned credit things that are kind of coming back into favor.
They were old. Yeah, we are.
I taught he's going to talk about the 5 C's of credit, but I taught a 5 C's of credit class 25 years ago. So it's kind of coming back. What's old is new again. So it's coming back again. It is a little bit tougher. You know, Paul really did hit on some good topics and explained it well. But I mean, the business plan, yes, sir. That's fantastic. Working with I'm working with a startup right now. Been working with it quite a bit over the last couple of weeks, and they have an exhaustive business plan. They've got financial projections. They've got what their assumptions are on how they're going to meet those financial projections, and we're going to make the loan. So we do startups every now and then. They're rare, but they can be done. top. I'm gonna let Chip kind of.
Yeah, good evening. My name is Chip Harp. I'm a community banker with Regions. I've been with the bank for about 10 years. Gosh, been in Dothan for 22, 23 years now. So originally from Birmingham, but Dothan's certainly home, you know, by now. But you know, we work as community bankers. We work with a wide variety of businesses, sizes. I mean, everything from, you know, really small businesses, you know, sometimes startups, to some of the larger businesses, you know, corporations that you find here in Dothan. But you know, one of the questions that we get asked a lot is, well, you know what, you know, banks aren't lending money. I mean, what, you know, we're hearing they're not lending. It's so tough. I mean, you know, what are banks looking for, you know, when it comes to making a loan? And you know, really, it all. I mean, there are different, you know, different techniques you use to evaluate a credit. But it all really comes down basically to, you know, what we refer to as the 5 C's of credit. And I apologize if some of you probably already heard this already, but I think it's really important, you know, for you to hear and understand. But basically, you know, the bank looks at 5 things, 5 areas when it evaluates a credit. The first C, character. You know, character reveals itself by a credit score. You know, when you apply for a loan at the bank will typically pull credit on the business and you as an individual. And credit score certainly says a lot, but also too, that report shows us, you know, are you paying your bills on time? How much debt do you have? You know, credit cards, if you have credit cards, are they maxed out? You know, are you part of the community? Have you been a part of the community for a while? So integrity, things like that, you know, that all goes into character. The other would be capacity. You know, with your business plan, your business, are you really generating the cash flow? Do you have the ability to, at the end of the day, make the loan payments and pay the loan back to the bank? That's certainly important. Collateral. You know, we do some unsecured lending. Really, honestly, it's kind of few and far between. The bank certainly likes to have collateral, secure the loan if we can. If something happens, you know, the business doesn't make it, the loan doesn't perform, you know, the bank can call on the collateral and, you know, liquidate the collateral, do what it needs to do to try to recoup, you know, some of the loss back on the loan. The other would be capital. You know, banks typically don't lend 100% of your project, you know, the funds that you're looking for. So the bank's going to look at, you know, do you have some financial resources to put some money into the project to help support the loan? Do you have some cash reserves possibly to get you over the hump, you know, for a couple of 2 or 3 months while you operate, get your business up to speed? So we look at things like that. Also too, let's see, what was the other one, Mark? Conditions. You know, if you're starting a new business, is the purpose, you know, your business, is it feasible? Is there a market? Is there a place for that type of business in the community? Some of that's going to be, you can have that mapped out in the business plan that you put together, but you know, does the bank look at it as a viable business, something that can really, you know, make a go of it here in the community? So those are really the, you know, pretty much the 5 C's. I mean, the bank evaluates each credit a little differently, but basically, fundamentally, those are the steps that the bank looks at, you know, when we look at making loans. So we're in business to make loans, and we're not scary people. If you have questions, call us. We've got business cards. Mark and I both work out of our main office on the Circle, a 2-story wide building. We're right across the street from Verizon Wireless, right there on the Circle. So feel free to call. Our email address is on our business cards. If you just want to email and ask a question, you know, we'll be glad to respond that way too. So, but thanks to Steve and the Chamber for inviting us and having us here. So
thank you, Chuck. Mark, thank you. And we'll have questions here at the very end. How many of you are going to have your business in the city limits? How many of you are going to be outside the city limits? The reason I ask that is because the U.S. Department of Agriculture or Rural Development has some loan programs for people who are out in the county. Now, they're not represented here because we brought the Regional Planning Commission. They actually started a loan program to kind of take up for within the city what the USDA doesn't provide. And they have 2 loan programs, the microloan program, the raw loan program. So The Regional Planning Commission is here, Miss Emily Waters and Rachel Armstrong, to tell us about the 2 programs that they have at the Regional Planning Commission.
Okay. And I'll talk about the revolving loan program first, and we'll just pass that around with these brochures, and then Rachel's going to talk about the micro loan program. My name is Emily Waters, and I'm with the Southeast Alabama Regional Planning and Development Commission. Our offices are actually located here in Dothan. We're in the Houston County Administration Building, big tall building downtown. But we cover a 7-county region, which you'll see on those brochures. It goes into all of the counties that we cover. And I'm excited to say that I have been working with these programs since 1996, so that makes me younger than I am, so I'm excited. But no, these programs, we have had the revolving loan fund program since 1991. And with this program, both of them are going to be based on the need that you're going to have as far as your financing. And let me say also, we're not a bank, we don't accept deposits. We are just here, we don't compete with the banks. We're just here to partner with banks to help with what we call a gap financing situation. If you had a need where the bank was willing to lend a certain amount, but you still had a gap in there to make a project happen, that's where our revolving loan funds comes in. So just keep that in mind. We only fund 1/3 of the total project cost, up to $125,000. Now Rachel's going to talk about a micro loan program that's a little different, but like I said, with this program, we're not the sole funder. We can only do the 125. We do require, just like most of the banks do, at least 10% of your money into the project, cash money typically, and that's just because if we're going to risk our money and put our money into it, we like to see that you're also putting in some risk and that you're willing to put in that. That you also have something to lose, basically, and it's not just us. So just keep that in mind, that we do like to see your investment just as much as we want to see ours. We want to see what you're willing to put into it and what you have to bring to the table. We do require collateral on all of our loan programs. We can look at equipment, we can look at inventory, we can look at real estate, just what you have to offer. We just have to sit down and see what you can offer. A lot of times with our revolving loan fund program, we're going to be in a second position behind the bank. For example, if you're offering real estate, then we could look at a second position or second mortgage behind the primary lender in that situation. We also look at equipment. Sometimes there might be a situation where the bank may take a certain piece of equipment and we may take a certain piece of equipment. There's just a lot of different things, but just keep in mind that we do require collateral on all of our loan programs. We don't do any unsecured loans. Credit, again, is extremely important. That's going to be our first question we're going to ask you. That's what we're going to want to know. And that just shows your ability and your willingness to repay debt that you have previously. And that's going to be important to us because it's going to show us that, that's something that's important to you and you're willing to put in that time and effort to repay your other debt. As I said, if you do have problems with credit, there are a lot of different programs that you can get involved with and you can work to get your credit improved. And I certainly encourage you to do that before you even approach anybody. That's the most important thing, is just to get your credit straight and not waste your time or our time. I mean, we don't want to be an enemy to you. We don't want to get you in more debt or get you in more financial trouble than you're already in. And we want to be here to help y'all and to help your businesses succeed. So that's going to be something that we're just really going to look at. It's going to be your credit. Business plan is important. We don't require a business plan, but it's very important, and we really do like to see that because, like other speakers have said, it shows that you've put in your time and your effort and your thoughts into developing your business, and you know your business better than anybody. Our interest rates on our programs, right now on this program, the interest rate is going to be around 4.5% to 5%. Depending on what you offer as collateral, that depends on how long we're willing to go. If it's real estate, we can certainly go longer. If it's equipment inventory, we might look at 5 to 7 years. We can't go as long with that type of collateral. But these programs are here. It's a good program. Like I said, with the revolving loan fund program, typically you're going to work with the bank and you're already going to have that financing pretty much secured, and then you're going to come to us and we're going to be able to fill that gap for the additional capital that you may need to get your business going, or expansion. Either we do startup or expanding on either one of the programs. So I'll let Rachel talk about the microloan program.
And this is our Dothan, Houston County microloan program. It actually was started in 2004. And the main reason it was started is because we have another microloan program, but it is through rural development, like Steve was saying, and it could not serve the businesses inside the city limits of Dothan. This was started through donations from banks, the chamber, and us, and we operate it just like our other microloans. This is actually a smaller loan though, and we will not, this is strictly with us, it's not partnered with the bank. And these loans could be anywhere from $4,000 to $20,000. And we still on this, you require the 10% equity being put in, and job creation is ultimately, all of our loans revolve around job creation. And these interest rates on this one's gonna run a little bit higher just because usually on the microloans, it's a little bit more risk than you would say with the bank or whatever, with the revolving loan fund. And we do startups. A lot of times this helps when it's a small business, maybe home-based starting out, and you just need a loan for maybe one piece of equipment. We look at all different kinds, like Emily said, of collateral. You just need to, we would have to sit down and discuss it. Terms are fixed. It's usually 2 to 4%, which is running around anywhere from 6 to 8% right now. But it's pretty much the same as a revolving loan fund, except that the bank is not a partner. This is strictly a loan from us to the business.
Any questions?
If y'all would though, stay up here and we'll get all of our presenters up here, and then we'll have this question and answer period.
And I will mention, I know two of you raised your hand about nonprofit. We don't do any nonprofit. So just want to make sure y'all.
So first off, let's give them all a hand for if we could, let's start with Sandra. Sandra, if you would just mention the next level program, and then we'll open the floor up for questions.
Okay. Next level. It's spelled NX, capital L, EVE, capital L. It is a series of business planning. The idea, the logo behind the curriculum is learn it tonight, use it tomorrow. It's very intense. It's a 9-week series. Currently, we're running one here in Dothan and one in Enterprise. I recommend it. It is low cost. Every evening, there is a different topic that's discussed: marketing, management, legal entity, bookkeeping, accounting, taxes, financing. By the time you complete the 9 weeks, conceivably, you could have a completed business plan. Now, what happens, most of the time, we don't have a completed business plan when you finish. But you've made all of these contacts because we invite experts in the local area to come in and speak. Some of your bankers here have participated. The Regional Planning Commission has participated.
Mackroyce attended it.
When I first started out in '97.
Yes, sir. There you're dating both of us. That was the first time we offered Next Level. There are several curriculums out there that offer this kind of series. We like Next Level, but we can also do Core and Fast Track.
What do you consider low cost? You say low cost.
$150, and I consider that low when the other states charge $595.
Yeah, you know, okay, $150.
Yes, sir.
And includes your textbooks and everything.
So it does include your textbooks, binders, all the handouts, and you're not going to find one series where you will meet and make the contacts that we will provide for you.
Yeah, and the professors come from Troy, so you're actually getting college professors. You can't go to college for that $150.
Okay, so just anybody have any questions for any of our representatives here? Think you got it all?
I know y'all got some questions.
Yeah. Well, I don't know. We got some nonprofits here. Does anyone here might have some information on the community block grant? That might be something that would benefit them, because I know they do some type of funding for nonprofits in our community. Am I correct in that?
Well, yeah,
or is that something that might be?
We have a committee. You know, the city's appointed a committee. Dothan is what we call an entitlement city. An entitlement city because it's not competitive. They don't have to compete with other places to get the money. They get about $560,000, $600,000 a year. That money has to be spent in accordance with a consolidated plan. The consolidated plan is put together by the Planning Commission through surveys. It's available at the library. Whenever they do a consolidated plan, they have to have it available for review for several weeks. If you're interested in your community, it's probably a good thing to go read it. I must say that there was a dearth of signatures on that form to sign that plan out to read it. Most people don't read things. But the fact is that, and if you want to get some money for community development projects for low to moderate income communities, you have to present it to the committee, and then they take it to the CDBG administrators. But again, that's federal HUD money designated for low to moderate income, and the Regional Planning Commission knows all about that. They're out here doing all sorts of things. Now, this is the only...
The Dothan Planning Commission is who sets up, who he's talking about does the community development block grant. Ours is, it's not, we are regional planning.
This is the only entitlement city within.
But I will say this, most of the time Dothan is going to use their money to, that's what they use to pave streets, to do housing rehab and things like that. They don't typically do a lot of nonprofit type funding through their CDBG program, because that's not the primary purpose of the money. Right. The primary purpose is more for infrastructure, like water, sewer, that kind of thing. So I'm not saying it's not something they would look at, but probably it's not going to be an option under the CDBG, under the block grant.
Well, based upon what you just saying, somebody said that it's based upon federal. Did you say federal HUD?
It is.
It is HUD.
It's through HUD.
It's HUD money. Which
has to be in low-income areas.
Has to be in low-income areas.
Yeah, there's a lot of regulations and guidelines that they follow. But just for an example, the old Young Junior High building over there is where our program site for the Family Service Center is.
Right.
And some of the CDBG funds that were spent this year went to the restoration of the windows for that building, because we do provide community service to low to moderate income area. And so some of the money, we were allotted some money to refurbish the windows. So that's just an example of the infrastructure that is used for CDBG.
And so you say it's a committee, huh?
Yeah, well, there's a committee reviews all proposals.
Really?
But again, they have to follow the guidelines in the consolidated plan. Right. You know, there's all sorts of plans out there. You got a strategic plan, a comprehensive plan, a consolidated plan.
Typically, they have a public hearing. I don't know if they just do one a year or if they do a couple during the year. I'm not real sure. But typically, they have public hearings, and you'll see it advertised in the Dothan Eagle, or, well, probably just the Dothan Eagle. But, and that would be your opportunity, or the public's opportunity, to go and talk about the needs and different things, and that helps them to develop their plan for the city of Dothan. And their funding, gosh, they probably will get it probably October, November. So I would think probably the end of this year you might be looking at the public hearing. But you can call the city of Dothan. I would imagine Todd McDonald, is that who? Yeah, with the city of Dothan. His name is Todd McDonald, and he can give you a better idea of how their public hearings are handled. And
Maurice Head also would know all about it.
Right, and give you more opportunity to talk to them about going to a public hearing and talking about what some different options are.
Okay. I appreciate it.
All right, so any other questions?
Yeah. Okay. Oh, okay, go ahead.
Yes, sir. It will be in our next fiscal year. So it would be sometime after October the 1st.
Okay. All right. Okay. Dealing with SBA loans, there's different things out there about who you need to go to and how many times certain things have to be done. One of those things is dealing with the turn down. How many times do you have to be turned down by a bank before you can apply, or even do you have to be turned down? Because I heard from one person that you don't even have to be turned down by a bank in order to apply for an SBA loan, or is that for different ones? I guess that's the question on that.
Well, first of all, I don't think that even qualifies for the one. She spoke to that program that used to be It's not in existence anymore for a direct loan program.
Mackroyce used to. It depended on the size of the area. If you lived in an area that was over 500,000 population, you had to be turned down by 2 different banks.
But it doesn't exist here.
No.
So it doesn't, what used to be doesn't matter. It doesn't exist.
Okay. Now, what Brent said the other day was, he says that they're internally, when you go to the bank, there's a form that the banker fills out that has to state that you don't qualify for your normal loan without SBA backing. But he says that's all in-house. It's a subjective opinion, but you sign the form. And so he said that that's really the only statement that has to be made anymore.
Well, the SBA is not lenders of last resort. What they are is they shore up shortfalls in what we may be looking for, whether it be maybe you don't meet quite the cash flow coverage we need, maybe the collateral position is not strong as we need it to be, or perhaps as in a startup, which is most of what you're talking about here, we're just not comfortable without having that little bit of that extra security of having the guarantee position. The guarantee position changes depending on the type of loans. It could be as low as, what, 35% and as high as 80%. But, you know, that's still, nobody wants to throw money out there without having a chance. And the SBA's not throwing it out there without a chance to give it back to it.
Yeah, one thing would be like the amortization periods. You know, banks will, have some restrictions on the amortization, the length of time that it takes to repay the loan. Some of the SBA programs allow for a longer repayment schedule. You know, that would allow the business to generate, the cash flow, additional cash flow to make the loan payments. And so that's, like Paul was saying, that's, having the benefit of that longer amortization and repayment schedule could be the one thing that really, enables you to get the loan and be able to get what you need. So that kind of helps shore up. Yeah.
But you're right, there's a lot of misinformation out there.
I put out some of that because I was told that at one time, and a couple of programs back I said that, and I've been trying to clear it up ever since.
Well, if you listen to people, people will take a different approach to answering questions like that, and sometimes it confuses people.
Sure.
Go ahead.
Yes, that's what I was going to ask Sandra. Mackroyce was talking about. There was a loan many years ago. It started off the book that we said things not like it used to be. But it was called a Wallace Link Deposit Loan. That's no longer in existence.
Yes,
You
sir.
never heard
It is
I've heard of the
state.
program. I'm not
And
sure
what
if it's
it
still
is,
around.
in banks that are state depository banks, years ago, George Wallace Jr., his son, established this, where in those depository banks, you could get amounts of money based on hiring at less interest. Now, it sort of went away when he went out of office, but the Treasury Department will say that there is a depository lower interest rate out there. So it's, to answer your question, no.
It's not. It's no longer. It was based upon the amount of time until you were turned down by different.
Yes, sir. And
It was based upon the time.
if you're a depository
Yeah. I guess I got another question, and you kind of touched on it a little bit, but I kind of want a little more clarification on it. Dealing with the amortization period or the time or the number of years, I guess, that the loan goes out, what's the benefit on that? Wouldn't that be lower payments if it goes out further? Say if I get equipment, banks might do, 3 years, and then if I go through the SBA on it, they might go out 5 years. Would that be the case? Is that
Right on.
right on?
Yeah, there are two pieces to a loan. Usually, the term to maturity. How long the loan will run before it matures, and you either look at renewing or it fully pays out over that time. That's one part, and then the amortization is actually what the monthly payment is calculated. How it's number of years, number of months that it's based on. So between those two, but the longer the amortization period, the longer you have to repay the loan. The payments are typically smaller, more affordable. Yeah.
Paying longer.
Yeah.
That's it.
Yeah. It's taking you longer to pay off the loan along with that amortization period. Yeah.
And a benefit of that for businesses would be more working capital. You're not spending out as much money per month. So now you have more money to spend on supplies, hiring new employees, and things of that nature. You have a little extra capital to work with if you have enough money that you get the loan for. And that's been a big problem with a lot of people, I understand too. They get enough money to get started, but they don't have enough money to continue in business, and that goes into your business plan and dealing with working capital. I heard y'all mention that a couple of times, having working capital built into it.
All of a sudden, you know, people are going to flood in, and you know, you're going to be wildly successful. I mean, there are cases of that, they're few and far between, I can tell you. So you want to make sure you got some reserves, some working capital, line of credit, potentially something like that, savings you put back in the bank, you know, to help you get through, you know, a few months while you get the business up and going. Yeah.
Let me just remind you of a story real quickly. I put a business into operation several years ago, but in their planning, not only with their business plan and development of their equity, they went out and got letters of commitment for the people that they were going to be manufacturing and selling to. So that when they came in, they already had commitment that they knew the day they opened their door, they had so much business that they could generate. And that was one of the few exceptions. They were in the black for the very first month. You know, you really don't see that. These guys will attest to that as well. But this business, they were a 7A program when they started, and within a couple of years, we took them out of 7A and refinanced, and this is a real success story. 5.5 years after they started, they sold to a national company, they retained employment contracts, and made a bunch of money. So that's a really a success story that I've seen. That's one of the best I've ever seen. But the planning these two guys did, they really went out and got it.
AfroDothan.com, baby. AfroDothantTV.com. Check it out. AfroDothan.com, where I get my info from.